Now, the best way to grow your money or make it more is to make it through an investment. That's the best way. The best way to grow your money or make it work for you is through investments. Now, just a disclaimer, I am not giving you investment advice here. I'm only giving you some tips based on my own experience. And if you need investment advice, so before you do anything with the information I'm going to give you here, please seek some investment advice. I'm not giving investment advice, just tip, but it's in line with the fact that the best way to grow your money or make it work for you is through investments. There are three ways you can make investments that I think many of the other things revolve around these three ways. Number one, you can invest in the stock market through buying individual stocks of companies that you think are performing very well, or you can buy index funds. The second way to make your investments is investing in real estate. That's very, very good way to invest your money. And the third way you can make investments or make your money work for you or grow your money is to invest in starting a business and run it successfully. All the three ways have potential to really grow your money or make more of it for you. Now, I want to talk about all the three. I'm currently doing two of these ways and soon starting to do the other one, the remaining one. Now, I'm going to talk about stock market investments, but particularly I'm going to talk about investing in index funds. And in particular, I'm going to talk about the S&P 500 index fund. I listen to Warren Buffett a lot, and I spoke about Warren Buffett in one of my latest episodes. And I got investment advice from him and followed it, and it does really work. And one of the advice that Warren Buffett gave, or gives and still continues to give, is that everyone should invest in the S&P 500 index fund. The S&P 500 index fund is an index that measures 500 of the largest publicly traded companies in the United States. And it has, over a long period of time, returned over 10% to the investors, people who buy it. And it is a long-term sort of investment. If you're thinking of investing in the S&P and you're thinking of putting money in and then coming out in a short space of time, then it's not worth it. But what I would like to do is to demonstrate or illustrate how potent an investment is that returns for you 10% or more, and then you reinvest that money and let compound interest kick in to work for you to make money more of it for you. Compound interest, as Einstein put it, he called it the eighth wonder of the world. And indeed, it's the eighth wonder of the world. Let me just show you something, how that works. So I'm going to share a screen here. So if you had nothing, let's start with nothing. You had nothing at all. And you're investing with a return, like investing the S&P that will return you 10% annually. And you say you want to invest for the next 20 years. And you are able to put, let's say, 300 pounds every month into $300 or pounds or whatever currency it is that you're using every month in there. And let's just say there's a slight difference whether you put it at the end of the month or at the beginning of the month, but you're putting it at the beginning of the month. And you're not increasing how much you're putting annually by a certain percentage. We'll get to that. And then let's calculate now what that will be for you. So you had nothing to begin with. You put £300 every month with a return of 10%. After 20 years, you have $229,000, or $29,000 if you're putting dollars. Your initial investment was zero, nothing at all. And you have deposited this amount here in deposits. Every month you deposit every year you deposit 3,600 every year. And that generates you this interest every year. By the end of the 20th year, you would have interest of 21,000. That's almost what some people earn in a year, but that is just your money sort of generating it for you. Total interest, accrued interest you'd have got would be 157, and you'd have deposited 72,000 in those 20 years. Now, tell me where you deposit money and this happens for you. And that's why I encourage that if you're young, you start this right away. And for some of you, you might have maybe you're advanced in age and say, oh, will this work for me? Then encourage the young ones. Put in that your next generation will be sort of well off financially. Some of you have some money you're keeping in maybe a savings account or somewhere like that. So say, for example, you had 20,000 there, okay? And for the next 20 years, and you can afford to put 500 in every month, okay? At the beginning of the month, how much would you have at the end of 20 years? Let's see. 529,000, almost $500,000. Now, of course, investments have risks. All investments have risks, whether you're investing in real estate, whether you're investing in the stock market, or whether you're investing in starting your own business. The key is to be able to manage those risks. If you are so much risk averse, then you'll never do anything where investments are concerned, and you'll be perhaps satisfied with living with sort of meager earnings, so to say. But compound interest through investments can really do you good. So if fees, it depends also on the platform that you go and do your investments in. I currently do that with Vanguard. And Vanguard is proven to be quite good. If you buy S&P 500 index fund in Vanguard, and again, it's just a tip, you do your own research. I'm not giving you advice. It might work for you. Just try to research what S&P 500 index fund is from Vanguard and see whether it's something that can help you sort of move forward in that. So the 10% interest rate return that you get from an S&P 500 index fund is something that it has consistently sort of returned over the years. So this is not, it could be more than that, but just on average, that's what the return is over that period of time. So if you sort of decide to say, okay, I even go for, maybe you increase that will increase as well. How much? So let's just say that this goes to 12%, because average is that, but sometimes you might be good with that. So how much would that be? Pardon me. 717 after just 20 years. And let's just see what interest you'll be earning by the 18th year. This money, this pot here, will be generating you 62,000 in interest without you lifting a finger to work. And this is what you get in a year. Divide that by 12, that's your monthly. You can decide to just take that as your own income. And that pot there, nest egg, is working money for you. I think that is very encouraging, so to say. So the tip I'm giving you today is that if you want to grow your money or make your money work for you, do it through investments. Investments, you can invest in the stock market through index funds or buy individual stocks of companies that you think are doing very well and need a lot of research to be able to do that and seek advice. You can invest in real estate, and that's another different ball game. I'll be talking about that in due course as well. Or you can start off your own business and really manage that business very well. It will make lots of money for you in a good way. So there you have it. My investment tip today is that the tip I have for you today, one of the millionaires would say, like Warren Buffett and other great investors would say, invest, but do it for a long term. For a long term, don't do short-term investments and get discouraged along the way. And remember, investments have risks, but it's about you managing those risks that is important. Okay, so that's what I have for you today, and I hope that is useful and that you'll take a step at least in your life to think about investments, because if you want to accelerate your journey to financial freedom and stability, you need to find a way of your money making money for you, your money working for you, a way of multiplying your money. And the route of investments is one of those ways. I'll be coming your way talking about various other nuanced ways of investments, but in the beginning, right now, take advantage of compound interest. Think about putting your money somewhere that makes you a return and take advantage of the compound interest. The S&P 500 index fund is one of those things. Do a little bit of research and study about the S&P 500 index fund and take advantage of it. Thank you very much for your kind attention today, and I look forward again to coming your way and sharing these tips with you. Bye-bye for now.